Don't you wish you had a crystal ball to predict which Malaysian sectors will shine heading into year 2025? Well, you're in luck, sort of. While I don't own a magical crystal ball, in this video, I will be your guide to uncover the sectors that are likely to thrive in Malaysia next year. And yes, I will also highlight some stocks you might want to add to your watch list. So buckle up, stay till the end, and let's navigate 2025 investment landscape together. Why should you care about Malaysia's GDP growth? First, let's address the elephant in the room. GDP growth sounds like a fancy term economists throw around to sound smart. But for us as investors, it's actually crucial. Think of it this way. GDP growth is like the health checkup for Malaysia's economy. When the economy is healthy, companies make more money and their stock prices tend to rise. Here's the kicker. Malaysia's GDP is expected to grow between 4.5 to 5.5% in year 2025. So, what does that mean for the stock market? Let's break it down with few key points and examples. First, corporate earnings growth, the stock market's best friend. When GDP grows, companies make more profit. It's like when your favorite nasi lemak stall gets more customers, they earn more and maybe they even open a second and third store. For example, in year 2022, Malaysia's GDP grew a whopping 8.7% and sectors like banking and consumer goods flourish. Bank stocks like Maybank and Public Bank benefited from more loans and investment growth. On the flip side, when GDP dips like in year 2020 by minus 5.5% during the pandemic, many sectors struggle. Second, key sectors that mirror Malaysia's economy. Yeah, this is the interesting part. Certain sectors are like Malaysia's economic mascot. Their performance is closely tied to the economy. Here's how they fare with GDP growth. First, financial sector. When GDP grows, it means more lending and investments and banks make more money. So stock to watch out for includes Maybank, Public Bank and RHB Bank. Second, commodities sectors such as palm oil and gas. Malaysia loves its palm oil almost as much as we love durian. High demand for palm oil and crude oil boosts giants like Sundami Plantation and Petronas-linked companies. For example, imagine Malaysia's GDP as a roti canai. Yes, one of my favorite food. The fluffier the bread, the stronger the GDP growth means the more satisfying it is for everyone. Banks are like the dal curry, essential for the dipping, while plantations are like the sambal that give it a spicy kick. Together, they make the perfect combo, and when one ingredient is missing, the whole meal feels incomplete. Third, investor sentiments equals to market's move. When GDP is strong, investors feels like they have hit the jackpot. More optimism means more money flowing into the stock market, pushing it higher and higher. But if the economy hits a speed bump, investors' confidence falters and cue the sell-off. It's like a party that ends too soon. Fourth, government policies, the traffic light for growth. Bank Negara Malaysia, or in short BNM, plays a crucial role here. For example, if Malaysia's GDP growth slows down, Bank Negara Malaysia may cut interest rate, making loans cheaper and boosting spending. Yeah, more affordable car loans. And when GDP grows too fast, Bank Negara Malaysia may raise the rates to cool things down. And for year 2025 outlook, the good news is that Bank Negara Malaysia has indicated that it will keep rates steady throughout the whole year, so we get a smooth ride for now. Malaysia's GDP growth holds behind the wheel. Now that we know why GDP matters, let's explore the 4 key drivers that powers Malaysia's economic growth and how you can ride the wave. First, domestic consumption, the everyday spend. What is driving it? Rising income, urbanization, and a growing middle class means more spending on goods and services. So sectors in focus like retail, e-commerce, and consumer goods. Hot stock, look out for stock like Mr. DIY, Padini, Eon, and Nestle Malaysia. These brands are like the nasi lemak of the economy, loved by all. Fun tip, if you have been splurging on bubble tea like myself, congratulations, we have been contributing to Malaysia's GDP too. Second, export-oriented manufacturing, which is Malaysia's bread and butter. Malaysia is a global player in electronics and palm oil exports. With steady global demands for semiconductors, companies like Inari Amerton and MPI are worth watching. But word of caution, do bear in mind the potential drawback in the event of a 100% tariff imposed under Trump 2.0. I did cover this in detail on my recent past video, which I'll put the link below and you may watch it if you have not done so. Commodities players to keep a lookout for, Sime Darby Plantation and KLK. Here let me quote an example. The global semiconductor boom has been a major win for Malaysia. But let's not forget, every boom has its bust. Keep an eye on supply chains disruption. Third, services sector, the MVP. Services make up the biggest slice of Malaysia's GDP. From banks to tourism and logistics, this sector is set to benefit from post-pandemic recovery and digital growth. Tourism is bouncing back so well that even Makcik's homestay is fully booked. Who said post-pandemic recovery isn't real? So key stock to watch out for, Maybank for banking, IJM under property, IHH Healthcare for private healthcare, and Westport for logistics. Full disclosure, as I'm recording this video, I do have an existing long position on IJM. Fourth, private and public investment. Building the future. What's driving it? Government projects like MRT3 and investment in renewable energy will drive the growth. So sectors in focus, construction, renewables, and tech. Hot stock, Gamuda, SolarVest, Yinsen, and TMB. Did you know projects like MRT3 and EV infrastructures are set to drive the growth? Think of this as Malaysia's upgrade package for the economy. Full disclosure, as I'm recording this video, I do have an existing long position on TMB. So what does this mean for you as an investor? If Malaysia's GDP grows as expected in 2025, the sectors we have discussed above will likely see higher revenues and profit. Over time, this could lead to stronger stock price performance. So take out your notebook and start building that watch list. Final words. Investing isn't about having a crystal ball, but it's about understanding trends, doing your research, and most importantly, staying patient. So if you found this breakdown helpful, don't forget to like, subscribe, and share it with your friends. Together, we can make smarter investment decisions and maybe even have some fun along the way. Now, let's turn 2025 into the year you make your portfolio shine. See you in the next video. Bye.